Hello, it's Jeffrey Christian of CPM Group. It's about 10:35 on Friday, the 8th of September here in New York. I wanted to talk about platinum this week. I will run through some of the fundamentals there. First, I wanted to say that in my Tuesday video, I was a little bit distracted, and at one point I was talking about platinum prices, and I meant to say that we thought that platinum prices could fall to $930. And I believe I actually said that, but then I just got very confused. I had sort of like a Mitch McConnell moment, and I said that we could see silver falling as low as $1,930, which was our gold price target on a short-term basis, which I had mentioned earlier. I think most people caught the context and just sort of wrote that sentence off as a Mitch McConnell moment, but some people seem to have been very confused. So let's get into the platinum. As we speak, 15 minutes ago, gold was around $1,947. I think it actually did get down to $1,930 over the last couple of days. Silver has dropped sharply, and it is about $23.30, which is up from yesterday's close, but off quite a bit from earlier in the week. Platinum did fall to $930, at which point we issued a new short-term trade recommendation with a target of $905. It is $903.50 as we speak, so that target has been reached. In that platinum trade recommendation, we did say that we thought that platinum could fall as low as $880, which is where it was in the middle of August. So just a couple weeks ago, it was $880. It rose sharply into the upper 900 level, and now it's come back down. We wouldn't be surprised to see if it breaks below 900 over the next couple weeks. Jump the gun a little bit. One of the issues that's hanging over platinum palladium is the potential for a major auto industry strike in the United States with General Motors, Stellantis, and Ford. That obviously could put a short-term reduction in the immediate needs on a short-term basis for that portion of the auto industry. And palladium is around $1,222 as we speak. But let's talk about platinum. This is the longer view. You can see the price really, well, it's not the longest view that we have. We take our prices back to the 1970s, I think, in our Platinum Yearbook. But you can see that at the beginning of this century, platinum was basically trading between $400 and $600. We issued a buy recommendation around that time. The price got up to $2,200 in early 2008 when there was an electricity shortage, which shut down the platinum industry in South Africa, just as the auto industry was thinking that it was in good shape. Turned out that the auto industry was not in good shape. There were people who were buying platinum, palladium, and rhodium at that time because of the supply disruptions in South Africa. The price shot up. By the second quarter, the auto industry realized that they were in a recession and that their sales were plunging. They cut back on production, and the price of platinum fell back down to about $800 by the end of 2008. Rose back for a while, and then 2012, 2013, the first half of 2014, investors started selling. There was a 6-month strike in South Africa during the first half of 2014. When that strike was resolved and South African production restarted, the price broke below $1,400 and went down ultimately to about $800. And then for much of the time since late 2015, the price has traded basically between $800 and $1,000. CPM Group has been saying that we think that the price can break above that on a short-term basis. If we're right and there's a recession in 2024, 2025, that would hurt the auto industry. There is a lot of dynamics going on in the auto industry, some of which are positive for platinum, but some of which are negative for platinum. So the platinum price could weaken then if you got into a recession. But between now and then, we wouldn't be surprised to see the platinum price rise and rise somewhat. We don't see it going back to $1,400 or $1,800 or $2,000 in the near term, but we do think that the price has some potential to rise in the short term, in the intermediate term, before the next recession. This is just a shorter term look at platinum prices since 2013. You can see the decline. You can see how it will trade between 800 and 900. Then it made a run up to 1,300 at one point during the economic recovery. Came back down, rose up to $1,200 when the Russians invaded Ukraine. Came back down to $800, got back up, and now it's back down, testing that 900 support level. One of the key things that we're talking about, and we take our projections of the auto industry's production and sales of automobiles out to 2050. This is pretty small. You may not be able to see it, but this is our main scenario for the auto industry, and breaking it down. The blue stuff at the bottom are cars and trucks that are burning gasoline. The next level up are hybrids, then battery electric vehicles. Diesels are that brown stuff, and you can barely see a little bit of yellow tips at the top toward the end of the next quarter of a century, which is natural gas. Platinum Group metals are still used in cleaning up the exhaust for cars that burn gasoline or diesel, and hybrids, because hybrids actually use a little bit more PGMs because they have a cold stop and start, and a lot of the exhaust that comes out is on the start when the engine is cold. And with hybrid stopping and starting, they need a little bit more PGMs to clean up the exhaust than a straightforward internal combustion engine burning a petroleum product. The International Energy Agency and CPM Group both project that by the year 2050, petroleum will still be the major source of energy for humankind, and most vehicles will be using petroleum products, or half of them will still be using petroleum products. So the IEA and CPM Group project that the major use of platinum group metals in the energy sector of the economy will be cleaning up the exhaust of hydrocarbons for at least the next quarter century. Neither the IEA nor CPM Group see fuel cells as a viable mode of road transportation propulsion. We see them useful in some stationary applications, in intra-city buses, in warehouse forklifts, and at airport tarmacs, where you have a energy or a fleet manager who can handle the hydrogen. But we don't necessarily see fuel cells as a major propulsion technology for on-the-road vehicles for the next quarter century. And going out to 2040s into 2050, we do think that there will be a transition away from both the petroleum-based internal combustion engines and electric vehicles toward hydrogen engines. Toyota has unveiled a prototype hydrogen engine, and we think that that is the way to go once you have solved the issues related to cheaply and safely shipping, storing, and distributing hydrogen, which we think will come over the next quarter century, but slowly, so that in the 2040s, you'll start to see this transition away from battery vehicles. But the bottom line is that for platinum group metals, the major use is probably still going to be vehicles for a long time to come. Now, within the auto sector, there are several things that are going on, and I'll come back to them in a minute. But let me first run through some other issues. The platinum surpluses and deficits and prices. And you can see in CPM Group's research, which goes back to 1976, We've only had about 7 years of deficits of newly refined platinum coming from mine production and scrap relative to fabrication demand. We don't include dummy variables for investment demand or other estimates of investment demand there, because we want to know if the market is in a surplus or a deficit based on fabrication demand. Fabricators or industrial users and jewelry using the metal, taking it out of the form of being platinum and making it into something else. Those people who use platinum in fabricated products, they need to use the metal to do their business. That is a very substantive, non-quixotic form of demand. Investment demand is radically different, and you should keep it separate. If you're looking at a commodity, any commodity, what you really want to invest in, if you're a long investor, is you want to invest in commodities that have shortages relative to actual consumption or fabrication demand. Platinum, by and large, is not consumed, nor just like gold and silver and palladium. These precious metals are used as opposed to consumed. Oil, natural gas, foodstuffs, those commodities are consumed. Metals tend to be used, and they are recyclable. So you have to pay attention to recycling. We have about 128,000 ounce, 138,000 ounce surplus projected of total newly refined production from mines and scrap this year relative to fabrication demand. That is down sharply from more than 400,000 ounces last year and almost 400,000 ounces in 2021. So we've had large surpluses and growing surpluses really during the pandemic and even after the pandemic. That has to do with some changes in the auto industry and some increases in supply. This year, the market is tighter. It's not in a deficit. The price tells you it's not in a deficit. If the market were in a deficit, the price would be rising. Looking at the auto industry, platinum has some things going against it and some things going for it. The thing that's going against it is the substitution away from petroleum-powered vehicles toward electric vehicles. And as electric vehicles don't use Platinum Group metals, so that when you see electric vehicles taking market share, battery electric vehicles, that's bad for PGMs, all PGMs. However, if you look at this chart on the left-hand side here, this is the market share of European passenger vehicles by fuel type. The orange stuff is gasoline, and it has basically been the major source of propulsion technology. Diesel is that maroon stuff, and you can see it was very large during a period of time up until around 2015 or so, when the European governments were subsidizing diesel fuel and subsidizing diesel vehicles. They got away from those subsidies, and the percentage of vehicles that are now diesel has gone back to pre-subsidized levels of around 10-15% of the market. The big growth has been the green stuff, which we call alternative power, and that includes hybrid vehicles and plug-in hybrid vehicles. And as I said earlier, a hybrid vehicle actually uses more PGMs than a gasoline or a diesel-powered vehicle because of the cold starts, the frequent cold starts in a hybrid. So, and then the blue thing at the top is battery electric vehicles. Those are the vehicles that don't need PGMs, including platinum. But the big growth has been hybrid vehicles because of the greater perceptions of greater range. And so that actually has been positive for platinum. Even though the shift away from platinum-intensive diesel catalysts has been detrimental for platinum, they're being replaced with hybrids. So that's relatively good. The bigger issue is there is substitution away from palladium and to some extent rhodium, to the extent possible rhodium, for platinum, not only in diesel vehicles, but also in hybrids and in gasoline-powered vehicles. So you're seeing a significant increase in platinum demand at the expense of palladium demand in the automotive sector. And the automotive sector is the largest use of PGMs. The other factor is that platinum is used in diesel vehicles, and diesel vehicles tend to be what we call commercial vehicles, or large commercial vehicles, buses, trucks, lorries, if you want to call the trucks something other than trucks. And what we're seeing over the last, and this is year to date in 2023, last year we've been seeing a recovery of commercial vehicle production and sales. China was kind of weak because of the lockdown last year, but China's come out of the lockdown this year, and you're seeing, about 15% growth year to date in commercial vehicle sales in China. You're seeing another 15% or so in the United States, and less so, but still positive. I mean, more than 10% in Europe, and about 6% or 7% in Japan. And those are vehicles that use a lot of platinum in cleaning up their exhaust. So there's some positives, even in the face of the increase in battery electric vehicles, which is reducing all of the PGM demand. I want to talk about investors and exchange-traded product investors. We call them exchange-traded products because there are some notes as opposed to funds that are exchange-traded. And we have seen about 136,000 ounces year-to-date net additions in ETPs this year. That's good because the last couple years you've seen reductions in holdings of platinum by these exchange-traded products. So you're seeing a shift. It's good. After 2 years of selling, we'll see how things go. ETP investors have been very fickle, however. They come in, they buy 46,000 ounces in January, and then they sell 12,000 ounces in March. They bought a lot in April and May. And then June, July, August, they have been net sellers of of platinum. On a year-to-date basis, it's 137,000 ounces of platinum. It had been 330,000 ounces as of the end of April, but the holders, the investors in the ETPs have reduced their holdings by quite a bit over the last 3 months. Very fickle net sellers since May. Short-term futures-oriented investors are also equivocating over the market. And you can see, or maybe you can't see because it's up against that black line, there has been a big increase in both short and long positions held by investors, institutional investors, and other high-volume investors in the futures and platinum options. We have been teetering. We test net short positions, but you are seeing increased activity in platinum on the part of futures investors, and it's both long and short. It's that same sort of fickle nature. Yeah, kind of like platinum. We're seeing more platinum demand in the auto industry. South Africa has constraints on future production trends. A lot of other platinum comes from Russia, which is at war with the Ukraine and has sanctions placed against it. Although the sanctions are not on platinum exports and sales, the sanctions are affecting the production because they constrain the banks that finance the mining and refining industries, and they also constrain supplies of imports needed to mine and smelt and refine metals. So there's some positives that investors are seeing, but then they're also looking down the road and saying, okay, well, didn't have that recession in 2022 the way some people said, and we didn't have that recession in 2023 the way some people said, but maybe we're going to have a recession in 2024 and 2025, and maybe it's going to be a significant recession, but any recession probably is going to have the effect of reducing auto production and sales, which will reduce platinum, palladium, and rhodium demand. So you see that same equivocation there. One of the big issues is you've got almost 15 million ounces of inventories that have built up over the decades in platinum. And about almost 7 million ounces of that are held by investors. And as I showed you earlier, and you can see it here a little bit, you saw a significant amount, more than 1 million ounces, I believe, sold by investors in 2012, 2013, and the first half of 2014. So that is something that is also hanging over the platinum market. Although, let's look at this, we've seen a big increase in platinum holdings in total since 2014, 2015. We've added a couple million ounces of above ground refined platinum in inventories. And part of that has been in ETFs, and part of that has been in industry inventories, but the bulk of it seems to be, and we estimate, in unreported investor holdings. Very important, I think. That's all I have for now on platinum. I will say this, we are, as I said, modestly bullish on platinum for the next couple of years. We would advise most investors, except for the most sophisticated investors, to avoid palladium and rhodium. We don't think that they are particularly good long investments at this time. They might be good short investments, but we are interested in platinum. But you have to be very careful because of the potential onset, or the likely onset at some point, of weaker economic conditions. That's all I have for now on platinum. Take care of yourself and those around you. See if you can do something good this weekend for the world. I'm going to try myself, and we'll talk to you again next week. Thank you.